Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. So, welcome on the second quarter. First one for stock traders finished quite right. We had one of the best quarters since 2013, which is pretty significant, but at the same time it created a opportunity for a correction, and at the beginning of the second quarter we can see a small decline on stocks, but obviously when we do have a bubble, this correction is very mild, is very limited, and didn't even retrace 23.6% Fibonacci. So we can see that this correction is pretty mild, but still it's for the trend traders, for the people who believe that we're gonna see a further upswing. It creates a chance for buying with lower prices and to jump into the trend. Apart from that, what do we have is from the fundamental point of view, we do have a weak car sales data across the globe. From United States, we all know that car business is huge in Europe, is huge in Japan, in Europe in particular, in, for example, Germany and France. Italy as well, obviously we all know those famous Italian sport cars. Sales data from the car makers is disappointing. Even though that we do have loans with low interest rates, so people are not taking loans to buy cars. This raises concerns, obviously, about the situation of the economy, but it's nothing major, because again, we can see indexes fairly high. We do have a correction, but the uptrend is still present. We have an interesting story on the safe haven assets, right? We do have gold, which is advancing higher. We do have yen, which is gaining strength right now. And how this situation is explained? Well, this is explained in the way that since Donald Trump was elected as a president, stocks went significantly higher, which was mostly driven by the expectations that Donald Trump will launch a stimulus package, new tax scheme, which should promote companies. And some traders are questioning that hype that happened after the elections. So wasn't that a little too big? Wasn't that exaggerated? This buying, we can say panic, this buying panic that happened after Donald Trump was elected as a president, because he's already a president for some time. Since November, obviously. And we don't see major actions. We don't see this stimulus. We don't see this package that everybody was talking about. That is why some investors are questioning this hype that happened after Donald Trump was elected as a president, and they explain the recent weakness on the global markets with this situation. We also do have this upswing on gold. My story for that is that institutional investors, hedge funds, big boys, sharks from Wall Street, they are closing their long positions on stocks, and they are slowly turning their heads into the safe haven assets. They are buying gold with good prices because they are expecting a major switch soon, or a major correction. Probably stocks are now being bought by the street, so smaller investors. It's usually how it is, right? those big investors, they set the trend, they start trends, they finish them. But when there's a trend change, it's not them who have the wrong positions. It's the other guys, smaller guys. So this is my story. That big boys are leaving stocks, buying gold and safe haven assets, but stocks are still going up because of street is buying them. But soon they won't be able to hold those high prices without any external help from central banks or from Donald Trump, for example. Right, that was a bit long introduction from the fundamental side. Unusual for us because we mostly focus on the technical trading. But well, I miss you guys. It's our first meeting this week. That is why this introduction was a bit bigger. But anyway, let's take a look on the calendar from Monday. What happened? We had PMIs from Great Britain, which came slightly worse than expected. From Eurozone came as expected, which is actually common for the Eurozone. That data comes along with expectations. There's usually a huge miss or a bit in United States or Great Britain, but that data from Eurozone is accurate, is usually accurate. ISM PMIs and ISM prices paid from United States better than expected. Overnight, we had interest rate decision from Bank of Australia, no change there. Today we are waiting for a speech from Mario Draghi and factory orders and trade balance from United States. On Wednesday, what do we have is again PMIs, but different PMIs, and we will have FOMC minutes, which will be influential for sure for American dollar. What we do have as well is PMIs from Eurozone and ECB non-monetary policy meeting. On Thursday, what we should get ready for is accounts from ECB monetary policy meeting, and Trump Xi Jinping meeting starts on a Thursday, so it will be important. And on Friday, obviously, it's first Friday of the month, so what do we have? We have non-farm payrolls. Non-farm payrolls, the most influential data for the markets. Relatively low number is expected, 180, so it won't be hard for the actual data to beat this number, and we'll see what will happen. It's always a question what will happen during non-farm payrolls. Okay, let's start with oil and S&P 500, because I put quite a big attention on S&P 500, on indexes in our introduction from the fundamental point of view. So let's start with that. Oil is advancing higher, and they are retracing this downswing that happened after the worst data from the inventories. We can see nice retracement here. We broke upper line of the descending triangle formation. We broke this horizontal support, and now the price stopped on the most important horizontal resistance created by those lows from the beginning of December. A breakout here will bring back hope for the price of oil. As long as we stay below this level, the sentiment is negative. But this negative sentiment is under the quite heavy pressure right now. S&P 500, all right? We do have an upswing. This is elections. So we can see that there's downswing. Actually, a correction didn't even retrace 23.6% of this uptrend. So this correction is flat. It's a legitimate correction. It's a typical wedge formation. Wedge is a trend continuation pattern. And when we see a wedge on the chart, we should expect that the trend will be continued. But obviously, buy signal is not yet triggered here. It will be triggered once the price will break the upper line of the wedge. So far, the price is inside the wedge, so the wedge should be continued, right? But once we'll see price above here, breaking the upper line of the wedge, we should see the price advancing higher. This midterm trend line is well, actually a long-term trend line, because it's from the beginning of December. It's under the pressure, but it's not so significant because it's steep anyway, right? So even after the breakout of the neckline, we don't have a 23.6 Fibonacci level. So it means that this trend line is not so relevant. I think the most important pattern here, the most important technical element here is this wedge formation, and once the price will break the upper line of the wedge, we should see a buy signal here. About sell signal, well, I'm not the biggest fan of entering market with a short position here. Entering with a short position on such a trending market, right? Going against the trend is never welcome to you. Usually what it makes you is debt on your account, not profits. Okay, our next instrument will be American dollar, euro to American dollar. You know that for the past few months, since November 2016, what we had here is an inverted head and shoulder formation, left shoulder head and right shoulder. Right shoulder managed to break the neckline here. This blue line, this black line is the neckline, and a horizontal resistance here. It happened last week on Monday, Tuesday, and it was actually it was surprising for me, because this upswing happened during the Asian session, and it wasn't supported by Europeans and Americans. And I was watching this, and I was questioning myself, is it sustainable if Europeans and Americans don't take part in it, and we do have a bullish gap? And always when you break such an important resistance, you need to have a backup with the liquidity. And there was no, there was that was a liquid market, but not as liquid as during the European session. But anyway, there was a bullish gap, and that gap was closed. After that, that was most traders found this as a false breakout. So we had a false breakout here, which helped the movement to accelerate and break the lower line of this channel up formation. Also, the next breakout was of this neckline, which makes all this false breakout, false bullish breakout, and that's why now the price is going lower. And as you can see, from 27th, since 28th, the price is making lower highs and lower lows every day, every single day. And today we also do have lower highs and lower lows. This is a typical downtrend. Now we have a small correction, but most probably the price will check in here soon. Latest volatility in the last 3 days since Friday is very low because the daily volatility is around 30 pips. But again, the support is 35 pips from today. So maybe we will see the price getting there today or tomorrow or the day after tomorrow. But that's the most probable scenario. Obviously, before touching the support, the price can reach the resistance first. But in general, the sentiment is negative. The trend is negative. And as the trend is negative, you shouldn't go against the trend. That's my idea of trading. Next instrument is gold, and gold is doing very good. Whole 2017 is very good for gold, as you can see. January, that's February. First half of March, we had a correction. That was quite a deep correction, but it was stopped. And now for the third time, we were trying to break the horizontal resistance here on $1,255 per ounce. We are now $1,260 per ounce. We do have two resistances here. First one seems like it was broken, but we still need to see the daily close above the support. And the second one is dynamic resistance here, which was created by connecting those two highs. And also it seems that it will be broken soon. The closest support is 1250. The next one is 1240. The sentiment stays positive. Gold is doing very good. The next instrument is Australian dollar to New Zealand dollar, and to be honest with you, I expected something more from this after this inverse head and shoulder formation and after the breakout of the trend line here. I was thinking that after the price declined here and bounced from this trend line, that it will create another bullish wave. Oh, but traders, what are they doing now is they are creating a flag. Okay, those two lines are parallel. We are having a flag here. Flag is a trend continuation pattern. As long as we have a flag, the trend is positive, but I would say that if the price will stay above the support, it's positive, but once the support will be broken, that will be the trigger for that should trigger a sell signal. Euro to Australian dollar. I told you on our last daily analytical report that this breakout was not very convincing. First of all, we had a major downswing here. That would be hard for the price to follow this and go deeper without a stop. Now we do have a stop, but from the technical point of view, the situation is not very clear. As you can see, we do have many lines here. Some of them are losing their meaning. Some of them are still working as a support and a resistance. I think, for example, this black line is not working anymore. This one was, even yesterday. But on this pair, we don't have any specific strong trading signals. New Zealand dollar to American dollar. Here we are also waiting for a breakout. There is a nice chance that it's a daily chart, so it's a long-term chart. Sell signal here, but in the shorter term, maybe on a H4 chart. Yes, what do we have here is a beautiful trend continuation pattern, this trend. Right? It's a wedge. Upswing, wedge. It should end with an upswing as well. American dollar to Polish zloty. I'm in particular very happy with this one. because I'm observing this instrument for a long time. I was writing few analysis recently. Here I said that there are huge chances that the price will go down. I had to wait a few days, but eventually the price went down sharply. And then we spotted this trend line, we spotted this hammer candlestick, and that for us was a great occasion to at least take profits from the short positions, but also go with the trend. Because what is the trend? Trend is positive. The price is making higher highs and higher lows, right? And we just received a hammer candlestick. Hammer candlestick on a long-term uptrend is definitely a buy signal. And as you can see, now we are 350 pips higher from this. So there is a reaction. We have a nice daily candles. Here we are also inside of the flag. Flag is a trend continuation pattern. What is the trend? Trend is bullish. Bullish trend, flag. Once we will have a breakout here, and that should create a buy signal on this instrument. Well, buy signal was already created, but this will only make it stronger. American dollar to Swiss franc. As you can see, we do have appetite, bigger appetite for safe haven assets like gold or Japanese yen, which I will show you here. But for Swiss franc, not so much. Traders are not in the mood to buy Swiss franc, and they are not in the mood to go against the SNB, National Bank of Switzerland. We all know what happened when you were going against the, with that bank actually. Well, against it, because they were telling that they will defend this peg, but they finally left that, abandoned this idea. But anyway, Swiss franc is the safe haven asset that does not have this appetite for risk. In the price, we are actually see that American dollar should be stronger against the Swiss franc. Why is that? Because that's an uptrend, that's an ascending triangle, and we are inside of the wedge formation. And wedge was created after the downswing, so there's a upswing. So there's an upswing wedge, so we should see an upswing as well. Upswing aiming this horizontal resistance. But buy signal is not there yet. It will be triggered once the price will break this resistance, which is not happening now. American dollar to Japanese yen. So we had a very positive scenario for this pair, especially because we are in a flag, in an uptrend, and the price created inverse head and shoulder formation, right, and managed to break the neckline. So that was excellent. That was excellent for buyers. But price then tested the neckline. It happens. It often happens. And as you can see, we draw this scenario when the price was here. It happens that after the bullish breakout of the neckline, the price retests this neckline as a closest support, right? So we had a retest, but it wasn't positive for buyers. So we didn't receive this kind of an upswing, which we highlighted here. And the price broke the neckline and now is advancing lower. That was, I won't say, I have to admit it was a surprise for us. Luckily we didn't have a position here. But from the technical point of view, it really looked that we will have a retracement here, especially that we got a nice reaction here. Hammer, and the price advanced higher, but then boom, and huge drop. So actually I can remove that head and shoulder pattern. Here it's not gonna be useful anymore. I'm sorry, I have to here. There is one local support. Okay, here, which now will be the resistance. Neckline is off the table right now. Okay, and this scenario is off the table as well. We have this resistance and we do have this support, but the sentiment is negative. They wasted their chance and the sentiment is negative here. On cable, we are waiting for a breakout. We are in the side trend which happened in October 2016. It's a symmetric triangle formation right now. We can see that resistance is strongly established here. Also support. Every trader in the world see this symmetric triangle formation, and I think many of those traders who see that now will like to trade it soon. With the bullish breakout here, expect that this breakout should be sustainable and should lead the price higher. And with the breakout of the lower line of the symmetric triangle also should be sustainable and also should lead the price lower. So just be patient. Trading is all about being patient. If you will be patient, you will be able to trade it long when the price will break the upper line, or trade it short when the price will break the lower line here. But here on cable, excellent pending order waiting for a breakout opportunity should emerge and is emerging right now. British pound is very positive against Canadian dollar, which makes me extra happy because I remember that I wrote a few analysis and I spoke and I told you that on our daily analytical reports about this bullish engulfing here. This is a very strong formation because it's on a weekly chart. On a weekly chart, bullish engulfing, which in the same time is the end of the double bottom formation, makes me extra happy, especially that when you go on this formation, you buy here, your stop loss is under the low of the second candlestick, and you can see that even with the decline, which was very flat, this stop loss order was never under heavy pressure, and now the price is advancing higher. They broke the long term, we can say long term, few months, so it is a long term resistance. The price is now advancing higher. You can see 1, 2, 3 candles in a row weekly where the price is making higher highs and higher lows. That's a legitimate uptrend. Now maybe we'll have a correction, but the sentiment stays positive, so every correction will be probably used by traders to open more positions, more long positions. That would be it. We do have euro dollar negative, gold positive, Australian dollar to New Zealand dollar positive, but not as strong as I thought. Here no signal. Here in a short term positive, in the long term negative, so it's mixed. Here definitely positive, here positive, here rather negative, and here we are waiting for a breakout. Right, guys, thank you very much for attending daily analytical report. Remember that trading and investment in financial markets involves an element of risk. Also, I would like to kindly remind you about our Twitter account where we post our trading ideas, which are doing really great. You can jump in on our Twitter account here and check our latest posts, and you will see that our analysis, they do work. So stay with us, follow us on our Twitter account and our website alpari.news. Thanks very much, and then I will have a short break, and after that a webinar about basics of Forex market. Thanks very much and bye.